All right, guys, so what's going on? February 26th, it's after the market close, and a lot of you are probably wondering what the heck is going to happen to the market going into next week, beginning March 1st, 2021. So, wild action today. Wild. The market had a daily trading range of easily 50 points plus to the upside, to the downside, to the upside, to the downside. Damn it. Closes at pretty much the lows of the day of 38.01 as we precisely predicted by the 13 Markets Move formula. So in this video, we're going to show you the exact pattern. It's going to show you exactly what's about to happen to the market next week. And if you missed out on all the cool trades we've shown you here at 13marketmoves.com, guys, make sure you visit the website, put in your email information, put in your WhatsApp information, schedule a 20-minute coaching call so you wouldn't miss out on what is coming next that can take your trading account to the next level. So here's what we got. As a student of the markets, answer a simple question here. What does this chart, and this one represent that could actually help you figure out what is coming next? So first, evidence number one, exhibit one, we've got, what do we got here? February 2018, or to be specific, we've got the month of February 2018. Predecessor that was January of 2018. And what we want to look at is the identifying pattern that preceded to this drop in February of 2018. Now, next one in line here is the current situation of February 2021. That shot was taken on the 25th, which was yesterday. We've got another scenario here, which was March 2020, March 31st, 2020. Notice the top information right here. And we've got the all notorious September through December top information of 2018. So, out of these four charts, if you are a trader or if you're trying to learn the chart patterns that could show you what is coming next in the market, which one would you go with that would resemble the current market scenario? So, I'll give you a couple of minutes, guys, to type in the answer in the comments. Is it scenario number one, which is the February 2018? Is it scenario number two, which is March 2020, preceded by the February 2020? Is it the situation that is currently developing? Is it the situation in September, October, December 2018? So pretty simple. Could have shown you a ton more examples, but just trying to keep this video as brief. As you know, I can put 100 charts in here, guys, show you the entire last 30 freaking years of top informations before they proceed to drop. So based off just the three simple criteria that I have given you, which one do you think? Is it number one right here? Is it number two right here? Or is it number three right here? And the correct answer is, it is the officially September, October, December crash. If you notice the pattern, so pay very close attention right here. Got top information right here in September as the whole world screams, oh yeah, hell yeah, we're going much higher. Of course, that's exactly the current market conditions. I mean, you got everybody on CNBC saying, oh, buy the dip. Buy the dip. Cathie Wood is buying Tesla, therefore I should be buying Tesla. Please get your own fucking brains out there. If you're a trader, please don't listen to the fucking news. At least take a look at the charts and what they're telling you is going to happen next. I wouldn't hurt you to learn the 13 Markets Move formula, that's for damn sure. So click the link below if you don't know that yet. But bottom line is focus on the pattern right here. So after the initial drop off right here, the market drops. It bounces once, drops. it hits a certain level, right? It hits a certain level right here, bounces again, hits the same level, bounces again, hits the level. Now it's just making a tiny little bounce, followed by a what? Followed by a complete freaking fall out. Now notice, from here to here, baby, Jesus, that's a 30% correction right there. Now, not as noticeable, but when we apply it to the current market conditions, guys, that's a huge move. I mean, that is an implication of a move from 3,900 all the way down close to the 3,000, 3,200 level. This ain't no joke. I mean, I know it doesn't look so crazy when you look at this chart, but the pattern is here. And so let me bring up the prior chart over the last 3 days. So this is a 3-month chart in the crash of 2018. We're actually going to replicate and apply to the current chart in the last 3 days of the S&P 500. And again, the only thing I want you to focus, don't focus on the levels. I roughly gave you the move. It's about 30%. Now 30% from here to here, baby. Not 30% necessarily from here to here. So considering we're already down somewhat on the S&P 500, still got an easy 20% move lower to go here. Now, focus on the pattern. Again, top, drop, attempt to bounce, short to bounce, drop, short to bounce again, drop, short to bounce again, and here comes the fucking crash. Now, let's review the chart for the last 3 days. Okay, so here's what we got, okay? We've got a resemblance of a head and shoulder formation right here, which is basically represented for a top just above the 3,900 level. You've got top information continuing on, pre-market, after-market, post-market, and so on. Very highly resemblance. The pattern I just shown you on the monthly chart going back to September of 2018. Now notice what happens next. The market drops. And everybody says what? Just like they did in September of 2018. They said what? Amazon drops. In September of 2018, the last days of September, what did they say? Buy the dip. Okay? Stock bounces, drops again. What did they say? Buy the dip. Bounce again. What do you want to do? Guys, you want to short every one of these bounces. Bounce, you short it, you collect the profits. Bounce, short, collect the profits. Bounce, short, collect the profits. Next bounce, you want to fucking short if there is a bounce. Now, based on this pattern, okay, top information equivalent to that September 2018, drop, bounce, drop, bounce, drop, bounce, drop, which is followed through by a greater move to as much as a 20% move lower. Now, it doesn't mean it's going to happen in one day. It doesn't mean it's going to happen in 1 week. But there is a much bigger move. So in either scenario, there's two scenarios, Monday, you bounce, drop, or you just go straight down. Okay? The number of attempts of the market to move higher today after a 100-point move in the S&P 500 futures, it's pathetic. The highest the market was able to bounce today was about 20 points. And going into the last, guys, if you paid close attention, let me show you this. I mean, this is trouble for the market. When the market participants cannot make up their mind about what's coming next, okay, there's only one thing that you can count on, and that is the fact that the VIX is going to go through the roof. So basically, you got to set up where the market thinks, oh, let's buy the dip. Oh, shit, maybe we shouldn't be buying the dip. Fuck, we should get out. We should buy, oh man, we should have bought the dip. Fuck no. We think the market could go way lower Monday and next week. So why don't we get out now before everybody else does? And there's a few arguments that you could actually make against that. So let me show you what they are. So it is actually quite simple. Most of the Wall Street analysts, they were recently highly bullish on everything. Okay, and if you've been following a lot of news media channels, they were telling you to buy the damn bit. The bit. They told you to buy the bit at 57,000 right before the damn Bitcoin crashes all the way to 41. By the way, we've nailed that crash. We've called it out in our alerts group. Now, S&P 500 is what we're looking at right now. Daily chart, February 26, 2021. So basically, we end up right at this level of 38.11. Now, a lot of you would argue, oh, okay, well, that's exact the same level. We're stopped out at the end of January, and we couldn't move lower. Now, I want you to shift your focus just a little bit, going right here, September, October. In both of these instances, as you can see, there was a little bit of a stalling out action right at the blue line, which is the 50-day moving average. But look what happens next. Not only do we break below, but we also gap down. See, the moment we get to that blue line, we stall out, and what happens next? Not only do we go lower, we gap down. So that makes it for a very nice move 3 formation in the market. We're actually going to gap down lower. So the gap down Monday, guys, got about a 87% probability of the market actually gapping down Monday. Now, considering how volatile the market has been in the last 30 minutes of the trading session today, guys, it's a no-brainer. There is one thing for a damn fact that's going to move higher, and that's the VIX. Now, considering the fact that NASDAQ's been dropping for quite some time, meaning quite some time, NASDAQ has not done this, which is going about 10 days lower consecutively. That is meaningful, as even though some institutional investors were trying to protect this level, the fact that NASDAQ itself cannot bounce the fuck out above the blue line after about 4 days of consecutive action spells trouble. That tells you not only NASDAQ can go to about 12,250, it can actually go and fall the fuck out all the way to about 11,516. Now, there's one thing that's been unanimous on pretty much any chart I can show you guys, and this is the death cross, which has been the predecessor for all the major drops to the extent of 10-20% in every correction in the market in the last 10 freaking years. So basically, it doesn't really matter which index you look at. Here's the Dow Jones, guys. Look at this red action on increase in volume, and the cross bar, which is defined as a death hook, okay, typically brings lower movements. And as you can see, if you analyze different indexes over time, we don't necessarily have to stop. Institutional investors like to stop and buy right around this area and use that area as a support. But oftentimes, as you can see, sometimes we can overshoot just under. Sometimes we can overshoot all the way down to the orange line, which in this case would be 28, 288, 282. So considering, you know, the market momentum higher, I mean, it's going to be no surprise. We can easily move about 2,000-3,000 points and a Dow lower, retrace back maybe from this 28,000 level. Now, this could be just the tip of the iceberg, depending, okay, how the move is actually developing, okay? VIX can go literally to the freaking moon. Now, VIX to the moon is nothing new considering the recent market environment. Okay, we've had VIX shooting up to the 40s. It's only at 27 right now. We can easily expect VIX to go above 34, 36 here, hitting 40 plus at some point next week. In the first week of March, yeah, why the hell would the VIX go to the moon in the March? Well, I don't know. If you started the history, maybe, March 2000 rings a bell? Anybody? I mean, March 2001? I mean, fuck. That was the fucking top. And maybe you missed the market top video about a couple of weeks ago when we predicted the Tesla drop. Okay, we predicted the Tesla drop right here and was trading at 877 right before all of this took place, guys. So, you know, you could have done nicely on these Tesla puts. And if you haven't, that would be a reason for you to click the link below. Get educated now with Charts Diversity's course, pull the trigger so you don't miss out on the next move because it's highly predictable in Tesla. Now, the rumor is Cathie Wood. Now, I personally don't give a shit about Cathie Wood or what the fuck she's doing, buying, or anybody else doing for that matter, because I follow my own system and it proves to work in most instances, and it proves to work for most of our traders. You know, it's no secret you gotta have some fucking psychological discipline to do this and stick to any system. So the bottom line, however, is it's got a very high ratio of predicting the turnarounds in the market, the trend reversal opportunities, and the fact that everybody on TV is saying, well, Cathie Wood is buying the dip, it's not a reason for you to be buying the dip. And the question is if Cathie Wood was right on Tesla years ago, does it mean right? Does it mean that she's going to get it right this fucking time? Well, based on this chart, and based off the fact that how unpopular our call was about 2 weeks ago, 3 weeks ago when we nailed the Tesla top, again, damn it, 13 market moves, nailed the Tesla top again. Fuck, can't believe this shit. Okay, so there you are, guys. Now you're probably wondering, okay, well, they're buying the dip. And the question is, Cathie Wood's been selling a shitload of stock yesterday. Why? Maybe she's going to use the money to buy the dip in Tesla. That's what you're thinking. Well, I got a fucking question for you. Since Tesla announced the Bitcoin purchase, has the stock moved higher or lower? As a matter of fact, the common trend right now, okay, Square announced a major purchase of Bitcoin just a couple of days ago. And what happened to the stock? It got hammered. Guys, that was our main alert 2 days ago when the stock was at 250. We said short the hell out of it on Square. And guys, why do you think all the stocks that are buying a shitload of Bitcoin, why do you think they have a common behavior, which is what? Fucking going lower. Well, it's very simple, okay? Because the chart of Bitcoin, as we accurately predicted, it's got a short-term top. Yeah, don't be surprised if you see Bitcoin at like 32.5 within the next 3 weeks. I'm telling you this because of 2 reasons. One, just all the other charts I've just shown you, it has a magic death cross formation right here and increased volume. That is a recipe for a move lower, not a move higher. It does not mean Bitcoin cannot move a couple $1,000s higher and then drop all the way to 32.5. Okay? I mean, Bitcoin is a volatile thing. If you look at any particular instance in the moment in time, yes, it could be up. But overall, what we're saying in the next 3 weeks, Bitcoin's going to be lower rather than higher. And we did nail the top over the weekend, which is exactly 7 days ago. Actually, it was like 6 days ago, and it was trading right here at 57.5. Guys, if you don't know how to short Bitcoin, I will list a link below this video where you can set up a Bitcoin account. Specifically, you can trade futures on Bitcoin. Really simple. You can do leverage 10, 20, 100 times X. Just follow the instructions below this video. If you have any questions about trading Bitcoin, make sure you click one of the links below. Schedule a 20-minute coaching call. But the bottom line is, got nothing against Bitcoin, okay? But how would you like a chance to buy more at a lower price? Well, the way you do that is you short the hell out of it. You make money on the drop. You reinvest, buying some more when the price is to your advantage. And you got a better entry point on the long side. So if you're not sure how the hell to double your Bitcoin holdings in the next 30 days, definitely schedule a 20-minute coaching call. Stop playing around. Know how to trade this charts. But without any further ado, okay, let me just summarize this by one freaking chart right here. Actually, I may just show you a couple of charts, guys. And that is the chart of the reopening economy. Let me just show you what the fuck is reopening economy going to look like. It's going to look like the chart of BKNG. Now, if you look at the chart of BKNG, it's not a high volume trading stock like Amazon or Facebook or Tesla or fucking some other bullshit for that matter. But here's what you got here, okay? You've got a huge sell-off on strong volume right here at 1 million shares. This is the second strongest sell volume on BKNG. Now, sometimes things will bounce and really light volume. It does not mean that the bounce is going to be sustainable and meaningful for any matter, okay? But this is your reopening economy kind of trade. Your reopening economy kind of trade, guys, is something you should be taking advantage of, while guys like Tom Lee on CNBC will tell you, oh yeah, let's reposition the portfolio. Let's buy a lot of these reopen the economy type of stocks. Well, let me show you. This is probably the most prominent example right here of how you should trade the reopening economy stocks, okay? Because they will be unloading the hell out of these travel stocks, restaurant stocks, COVID-19 vaccine stocks. They are all going lower. Don't let the media fool you guys. Just a quick warning, if you know specifically how to trade these stocks, like strike price, all this stuff, then click the link below, find out more information. But let me build the case here to bring a little bit light to this tunnel right here for you guys. And so basically, Wynn Resorts. Okay, Wynn Resorts. What's the significance of this chart? Well, let me tell you the significance of this fucking chart right here, guys. Okay, it's the fact that Wynn Resorts announces the worst earnings in the history of the company right here. And it's your hotel and casino stock, right? So this is your reopening stock. Let's buy the reopening stock because it's going to so much better when the economy reopens. Okay, so the worst earnings ever in the history, the stock rockets higher. And then, just as Tom Lee on CNBC says, whoa, we're recommending our investors to, transition from technology stocks into this opening economy stocks, reopening bullshit. You got this situation where all of a sudden the stock sells off. It's losing momentum at a rapid pace. And pretty much what appears right now like a black line and orange line pretty soon is going to be formed in a hook formation. Kind of like a hook formation right here. And after that, in this particular instance of the hook, the drop was not substantial or meaningful, but in this case it will be. And so this is another instance of a reopening stock that everybody's been buying in the expectation of the economy reopening. But the fact is, this stock's got nowhere to go but lower. So if it bounces like 135, 140, that's your perfect opportunity to short it. Now let me show you another picture right here. Which is going to be and of another stock that announces like the worst earnings in history, and it's actually moves higher. Yes, it's Expedia, and as you can see, it's forming this death hook. So this death hook, guys, it's basically a situation on the chart where your black line is not going to cross the orange line quite yet. As you can see in the last instance where we have a death hook here, the stock was still going sideways for a little bit, and then it freaking loses about 28% of its value real fast. So we could be going on a 28% loss right here off this current level of 161, guys. It'll put you easily under this blue line, putting you at about 125, 130 level. 30% drop in this, guys, will get you paid no problem. Okay, considering everybody that wanted to buy the damn thing, look, the accumulation is at the top. That's when you want to short the damn thing. Doesn't mean it cannot go a couple of dollars higher, but the bottom line, this is your opportunity to short the hell out of these travel stocks. Now, here's another one. Now, by the way, guys, Expedia has never traveled this far on the stock chart when its earnings were pristine. Okay, when the numbers were immaculate. And right now it's got the worst numbers, and all of a sudden, because of the reopening story, the stock is supposed to be worth more. What a bunch of bullshit. So here's what we got. Marriott. Okay, Marriott has never traded when the economy was perfect, when everybody was traveling, before anybody found out about Zoom and that they can conduct business from home. Okay, before Zoom was ever discovered, Marriott was never trading at this level right here. And now because the economy is reopening, it is. And guess what the coincidence is? The stock also moves higher on the worst earnings report in its history. Now, I will rest my case after we'll show you this last chart right here, guys. And that is the stock chart of RCL. Now, if you want to talk about real divergence and real dissolution of the markets right now, you don't have to look any further, guys. It's RCL. Royal shorting opportunity of a fucking lifetime right here. Okay, so RCL was able to secure some lines of credit. It's currently doing no business in relation to the type of activity it had before. It's losing billions of dollars, just all the other cruises. And they're bidding this stock again on the worst earnings report in the history of the company. Now, you tell me, how excited anybody should be buying the worst fucking report in the history of the company that's on the verge of a fucking bankruptcy. But Wall Street does. Why? Because they got too much free money. They don't know where the fuck to put it, and just this miracle reopening story, okay, does not make this stock worth more now when it's got billions of dollars more in debt. It makes the valuation here makes no sense. But forget about shorting this thing on the valuation. Short this thing on the expectations. The market expectations are so baked in and cooked in at these numbers that anything up to 100 should be shorted. Any area 93 to 100, anything above 100 should be shorted heavily in this damn thing. Just as the time where you get a lot of headlines surfacing everywhere in the media saying, oh, it's now a time to buy Royal Caribbean. Where the fuck were you here when the stock was at 50? Where the hell were you when the stock was, damn it? I mean, you should go back and look at our recommendation to buy this thing in March, April of 2020 when the stock was at 20. I mean, I remember posting a video saying, buy calls now, right here, and everybody was like, oh, it seems a little risky right now. Are you sure you want to do that? Fuck yes. You want to buy low, sell high. Now, when you're seeing every media outlet out there putting out articles like, you know, do you want to buy Royal Caribbean? Is now a time to buy it? Hell no. Are you absolutely fucking nuts? It's not the fucking time to buy it. This shit is on the verge of a bankruptcy. And if the company is not able to open and pay its credit line in the next year or two, okay, if its sales suck in the next year or two, it's not going to be able to make them damn payments. So, I mean, if I was you, I mean, maybe being a bankruptcy attorney for Royal Caribbean is going to get you paid a lot more than going long this damn thing right now. So basically what I've shown you guys right now, to make this long story short, I've shown you a lot of stocks. A lot of them are either travel stocks or hotel stocks or casino stocks that have been hit hard. They had to go get a lot of debt. They had to go get, you know, a lot of, or trying to get some assistance. All these rumors of all these cruises trying to get government aid is just a bunch of BS. They'll never get it because, you know, they're not American-based companies. And you know, these are your prime short targets that are hitting some major levels. I mean, this stock is still under a death cross right here. It's hitting this orange line. Guys, this is the time. This is the entry point you've been waiting for if you're a short seller, because as the market is making its move lower below the 3,800 next week, these stocks will get hit. And so it's not a story of these stocks, oh, you know, oh, this is a transition story. They're selling technology stocks to buy this shit right here. Okay, they're not buying this shit. Okay, there is a trend reversal going on right now that nobody in the news is talking about. They still want to listen to fucking Tom Lee, okay, who's luckily got the Bitcoin right because he bought it at 20,000, and thank God he was still bullish on it all the way to 3,000. I mean, of course, if you used that strategy, you would have done much better. I mean, you would have gotten it at 3,500 as we posted the video a couple of years ago. And you would have been at, you know, 57K cashing out when we called the temporary topping. But Tom Lee, if you want to listen to Tom Lee, buy calls. If you want to listen to 13 Market Moves, short the fuck out of this thing. It's going way lower from here. This situation of absolute insanity is not going to last once the market overall is breaking down. And so it's no longer a story again about taking money out of technology stocks and putting them in this reopening economy stocks, because these stocks are getting, these stocks are just showing the sign of the top where they're beginning to get hit, just like the technology stocks were beginning to get hit, like we were showing in the chart of Tesla. So this right here in RCL would be the equivalent of a Tesla top right here, which we've nailed. Okay, so needless to say, if we're to evaluate any other technology stock, let's say Amazon, which we predicted a magnificent drop in Amazon. So they're not just unloading the technology stocks, but they're also now beginning to unload the reopening economy type stocks. And when both begin to sell off, guys, this is how you get to see a market on S&P 500 okay, going back down to 3,400, 3,250. Okay, this area of 3,250, guys, they're telling you to buy the dip now because it coincides with what these institutional investors are conditioned to believe. Well, buy it at the support level. Well, who said it's a fucking support level? Okay, we're saying it's not the support level. We're going to slice right through it. It's either going to happen Monday or it's going to happen sometime next week. We're going to be way under 3,800. Now, considering some of the other indexes like NASDAQ, okay, we're already under. Okay, we're already under this level, and this situation is not going to improve. There is a move lower below 13,000 is going to take place before this has ever a chance of recovering higher. And this move can happen first by going sideways and then breaking lower. So any sort of momentum higher, guys, that's your opportunity to short the bounce. And you forgot what the hell it is to short the bounce. Let me play this visual here for you so you guys will be ready for next week. Don't forget to schedule your 20-minute coaching call. Let's beat this market next week. Let's rock.